Everybody, welcome back. Appreciate you joining in as I always say, continue to share, continue to subscribe. Any comments or questions that you have, feel free to drop a comment below, and I definitely try to get to it in the next episode. Over these past couple of weeks, in my episodes, I've been talking about a bear market coming up or a bear market being here. And this week, pretty much going to continue the same, type of tone as far as, a bear market being here. Just for August stocks and, when you look into the stock market, you're looking at a lot of stocks in August in general. That's usually a bloody month. What I mean by that is, a lot of stocks are going down, they're in the red. And I believe that's going to continue this year. Just with the pattern things are going, with the Delta virus, as I've been mentioning over the past couple of episodes. I believe that Delta variant, is going to be major. It's going to play a major role in the coming months. As far as vaccination, the enrollment, things like that, the amount of people that are vaccinated in the country, in the world, as far as the entire world, the amount of people that is vaccinated, I believe that Delta variant is going to have a big impact on that. Not as big as the original impact, when we first found out about Corona last year, and you saw every stock just go right down. But I definitely, think it's going to play some type of role going forward as far as the way stocks are going up and down, and the validity in these stocks. So that's what I wanted to talk about on this episode. Definitely going to keep it short and sweet. Don't want to keep you all too long here on this Sunday night. But I definitely wanted to dive into that. And then as well talk about the housing market. So just to start out on the housing market, as I've been talking about in previous episodes, I personally feel that, when you see the housing market right now, it's a seller's market, right? Definitely not a buyer's market. Every house is going 50, 60, 70,000 more than the original bid. If you go into a house, if you're in the housing market right now, and you're trying to get a house, you can speak for yourself as, you can look into it and you'll see, hey, pretty much when you try to go for a house, let's say the bid is at 300,000, you go in there, that's a starting bid. Usually that house sells easily for 350 to 400,000. Just because of the way the market is right now, the demand for houses is not a lot of housing inventory out there right now that people can actually buy. So the houses that are available, they're getting sold, fast overnight, or the bid is going up, like I said, 10, 20, 30% higher than the original asking price. So with that trend continuing into 2021 this year, starting last year, you start to see the uptick, and this year you're still seeing that uptick. And then unemployment still playing a role. Unemployment still going up. It's not as high as it was, as the beginning of the pandemic, but it's still up there when you look at the holistic view of things. And with that being said, personally, I just don't view, both of those withstanding, right? So something has to give. As we know, there's funds buying single family homes now, which are also driving up the price. They play a big factor into that because, they can pay 20, 30% more than the original asking price versus, your standard buyer can't really, afford that type of price. So that's driving that market as well. But, when you take that part out of it, the market's still doing pretty good. And it's not really correlating with the job market. And when you look at those two, like I always say, like I've been saying in these episodes, something has to give. And personally, I think it's going to be the housing market. I give it another year or two. And I see the housing market eventually going down some, just because you can't keep having, inflation going up and, housing prices, housing market just going up and up. But on the other hand, you have unemployment going up. People are not really getting jobs. And as far as the minimum wage, that hasn't went up too much in many other states. So just looking into that, something has to give. And I see the housing market going before the actual, job market going up and things like that, and people minimum wage going up, things of that nature. I just see that not happening before the housing market. So that's why I wanted people to definitely, take that into account. And on this episode, I definitely want to stress, look at the housing market, look at the stocks that's within the housing market. For me personally, when the housing market is booming, those type of plays, when you're looking at, like Home Depot, or you're looking at Lowe's, or you're looking at any type of concrete or any type of stock related to building a house or the foundation of a house, those type of stocks are going to continue to rise as long as the housing market is going up. But like I said, within a year or 2 years, once the housing market goes down, then you're going to see some of those stocks follow suit and start to go down. So just keep that in mind when you're looking into buying stocks. Definitely stocks that revolve around the housing market, because like I said, right now it's very unprecedented as far as the housing market being up, unemployment being up as well. So that's definitely unusual. But I do can see, personally, in the short term, I do see the housing market continue to boom. I can see those stocks related around the housing market continue to boom, just because of the short term effect. People are trying to get more houses. They're building more houses than they did a couple of years ago, but they're still not up to the demand. So they haven't met that supply demand point yet. So until they reach that, then yeah, I definitely see the housing market and the stocks revolving around the housing market continue to boom. But that's why I said a year or two from now, I see it going down, just because you can't do something long term like that. It's just something has to give. Eventually, people want to stop buying the houses, or people want the money to buy the houses are going to dry up, or there's going to be a chink in the supply chain as far as building those houses. So just keep that in mind when you're investing in any type of these type of stocks, because that's very important. Look at the entire supply chain. Look at how things are going right now. Just like when you're looking at the auto industry, right? Chips. Chips is a major thing, but chips doesn't just affect the auto industry. It affects many other industries. So just keep that in mind when you're investing in any industry. Look at the entire supply chain, because if you have something go wrong at one point in the supply chain, that could be a major effect on the entire operation. So definitely, keep that in mind. Like I keep telling people, me personally, I'm paying attention to the long-term effect, right? We keep reaching highs on, as far as the markets, S&P or the Dow, they keep reaching highs constantly every other week or every other month. They're reaching a new high, a record high. And you look at that, and you look at what we just went through as far as a world as a whole. I don't really see that trend continuing. Yes, you're going to have that big, V-shaped uptick, because obviously when 2020 came, it was a shocker that Corona was here, so everything dropped down. Then you see that V-shaped recovery where everything goes up. You can look at pretty much every stock out there on the stock market, and all of them have that V-shaped recovery. But at the same time, when you look at those same stocks like FANG, right? Those type of stocks like Facebook, Amazon, Apple, those type of stocks, those trends are going to continue as long as you have the virus around, or the threat of staying at home workers and things like that. Everything being technology based versus being, like in a shop or in an office or anything like that. You're going to see those things continue to rise, because they're pretty much pandemic proof, I would say. When you're looking at those type of stocks, they're very pandemic proof, because those are the stocks that usually thrive when you have a pandemic. When you have people at home, more people are looking at Netflix, or more people are buying home stuff or buying homes, right? So that's why you see the housing market jump. More people need spaces for their offices, things of that nature. So more people want to live at home. But once that tapers off, or once something becomes under control as far as the virus or things like that, then that's when you see those type of industries start to slow down. And you see offices, or when you look at malls and things like that, people that own malls, you're going to see those type of stocks go up, but you're not going to see it until that happens, right? So that's something I would tell people to pay attention to. I know a lot of people was anticipating, the great reopening play, especially when July came. Everybody thought, all the states are going to open back up. A lot of countries are opening back up. But then you have the Delta variant. And that comes, and that puts a hamper on a lot of other things, a lot of other plays that a lot of people thought was going to continue to boom, just because, you think we have this under control. But like I've been saying for months now, right? A lot of things aren't under control as you might think. So definitely keep that in mind when you're investing and when you're putting your money into things. It doesn't hurt not to invest, right? It doesn't hurt not to trade. Sometimes, like me personally, I don't trade every single day, right? Trading and investing are two different things. So that's why I always tell people, keep that in mind when you're looking into stocks. Yeah, I might trade. When I say trade, a trade is something I'm doing between 1 to 3 days, or 1 to 5 days. Within that week, I'm getting in and I'm getting out. Versus investing, I'm looking more long term. Like I say, I'm looking more a year or 2 or 3 years down the road. Where is this company going to be? Versus, okay, in a month or two, this company is going to drop down. It's going to have a bad type of month or 2 months type of streak going on. I don't want to invest into it, because I don't really look at that, because yeah, they might have it. They might have a bad month or 2 or 3 coming up, but I'm looking to invest into this company versus trading this company. So when I'm investing into a company, I keep that in mind, that long-term goal. So that's why I want a lot of people to look into what is your style? What is your style? What do you want to do? Do you want to invest or do you want to trade? If you want to trade, then yeah, definitely stay on top of your trends. Be focused on that. Don't get caught up in a lot of things, long term. You're looking to get in and out, like I said, within a week. But if you're looking to invest, then you got to play the long haul, be patient. Definitely don't buy a lot of whatever you're trying to buy at the first, when you first get into it. Scale into things, learn how to scale into things. That's the smartest thing to do. And like I always say, I'm not a financial advisor. This isn't financial advice. Definitely don't tell anybody when to buy or sell any type of security out here, any type of stock, whatever you want to call it. But I definitely want to keep you all informed on how to, go about looking into stocks and things like that, or how I do things, because that's very important to me, just to look into a stock or look into things before I actually invest or before I actually trade that either that stock or that crypto. But definitely for this month, like I said, I want you all to be very focused on the housing market. August is going to be a bloody month. Just as I've been saying, I know you all tired of me saying it's going to be a bear market, but as you can see, it definitely has been a lot of major stocks you see going down. It was earnings week, and then earning week is continuing to go on. But at the same time, those type of stocks are they're going to eventually, go down. They are already starting to go down. So definitely be cautious when you're playing those. Don't look into, investing, look into trading right now, just because this type of market is more of a trading market. Unless you have something good, now that's when you start looking into investing. Those type of stocks right now, they're very low, or if they're not low, they're becoming low. So those ones you want to invest into and get your long-term money into versus short-term trading type of style. So that's definitely the thing that you all need to be focused on. I know I'm definitely gonna reach back out, make another episode like I always say in the next 2-3 weeks. Because I want you all to slow it down in this type of market. You don't want to be fast with it. Like I was saying, it doesn't hurt not to trade. Let days go by where you don't trade, and just see, what your stocks that you're doing, that you're already in, see what they do. See how the mental game changes for you when you're looking at something over weeks versus over a day or two. Because sometimes you make a lot of impulsive decisions that you don't want to make because you're getting in and out of a trade or in and out of an investment, where you should be being patient and be long term. So that's something that I definitely want you all to stay focused on. Like I said, the housing market, I personally don't see it going up for too much longer. And then on top of that, government funding, once that stops for the housing market, that's definitely going to play a big role on as far as foreclosures, things like that. I see big foreclosures coming up in a year or two, just because once government funding stops, that's going to take a chunk of people out of their houses, because now they can't afford these houses anymore. They no longer can stay in these houses, even though they're under the threat of being evicted or things like that. So that's something I want you all to keep an eye out on, because you're going to see that starting to come up. The more and more Delta variant is around, and the more and more these type of housing is going up, and prices going up, inflation going up. You're going to eventually start seeing it slowly creep in, and then I personally think it's going to come all at once. It's not going to be like a 2008 type of crash where you see the housing market just drop 100%. But I think it's going to be like a 2008 2.0, I should say, on a smaller scale, because like I said, right now things are so high, inflation's high, housing, everything, even your equipment to build a house is very expensive right now. But the minute that government funding stops, and now people don't have that backbone to help them get through these type of times or get through those type of hurdles that they're going to go through, you're going to see a lot of people start selling the funds, or they're going to foreclose, and then that's when you're going to see the market go down, when you're surrounding those housing stocks. So just keep that in mind. Like I always say, I appreciate everybody joining in. I'm at my time now, I'm almost at 15 minutes, so I definitely appreciate everybody joining in this week. See you all in 2 weeks. If you have any questions, please drop a comment below or reach out like you have been doing. Thank you all for coming to join. Thank you all for sharing. And as always, like I continue to say, if you have any questions, drop a comment below, but take your time in this market. Do not rush it. I definitely, if you're asking my opinion, I think this is more of a bear market than a bull market. And then I definitely think that's going to stay its trend line until the end of the year. Thank you all for joining. God bless.